Pablo, good to see you. How you doing? How you been? JP, good to see you as well. How you doing, brother? How you been? Evening. Denise, good to see you as well. Evening. How you doing? How you been? We'll string it one by one. Let's go. Evening, Miles. We're here for you, bro. Let's go, Joe. Thank you for that, brother. How you doing? Good to see you as well. Good evening, Professor Miles and the rest of the CMF family. Good to see you as well, Carrie. How you doing? How you been? Good to see you, Funky. How you doing? How you been? Okay. My brother, do you think we will hit double digits this year? Thank you. Double digits on which project? On XRP? Case gets dropped essentially this year. It has to get dropped this year. Q3, Q4 will be dropped. With the banking license, with the essentially stablecoin regulations and the Clarity Act coming through, yeah, all these essentially fall into line. Double digits will be easy. Brother Miles, wish you all the best, mate. Thank you so much, Funky brother. Now, let's go through essentially what we're going to be talking about tonight's live. Let's do the intro, the disclaimer, and then essentially go through the comment section and straight into the first news. By that time, everyone's tuned in for essentially the first part of the live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles, and essentially, you can tune to this live Monday to Friday at 10 p.m. London time, where I essentially share you the news about the most recent things that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about, one, on what's happening around you in the world, and two, how close we are essentially to this digital future we're heading towards. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As in this live as well, which means if you do have any questions or even statements to make, put them down inside the comment section. More than happy to help you out. Now, there's a lot of news essentially we're going to cover on tonight's live, but it's important news is what I would say. Not a lot of news, but important news essentially to cover on tonight's live. One to do essentially why the market is not trending upwards, mainly because there isn't much good news, and we did have some data reports coming out which I revealed yesterday regarding job data, which were actually considerably well. But again, because we're not having rate cuts, the market is expecting some sort of oomph to happen for a rate cut. So we're going to talk about on tonight's live regarding essentially a Bitcoin wallet that just came out of nowhere and switched back on. And it's got about $2 billion in valuation, which stirred a little bit of a shaky ground for the Bitcoin space. We're also going to be talking about essentially Russia on tonight's live. We're going to talk about China on tonight's live. We're going to also be talking about Hong Kong on tonight's live, Ripple news on tonight's live. So quite a things essentially to talk about on tonight's live. Now, before we go through the first news, let's go inside the comment section and then we'll go straight to the first news. So we were at, and I read everybody's comments one by one if you're new here as well. So we were at here. Cameroon says, "Are you Muslim?" I'm not Muslim, no, but I respect everyone's religion, no matter what religion you are or what you believe in. Yeah. Afternoon, Miles and CMF peeps. Happy 4th, and yes, Sample, good to see you. So how you doing? How you been? And happy 4th of July to all the Americans that are watching right now from the CMF. Morning, Miles and CMF. Shelly, good to see you. Morning. How you doing? How you been? Hey, Miles and CMF Comatose, good to see you. How you doing? How you been? If everybody could retreat, make a comment outside the live, that would be fantastic, and give Miles some support. Let's go, JP. That's correct. If you haven't done this, CMF members, take 5 seconds, literally 5 seconds to like the live, retweet the live, and just put a comment outside the live. Hashtag anything you want to do with cryptocurrencies or political news that's happening. Comment, like, and retweet if you're watching this on X. If you haven't done that, please do that. And if you're watching this on YouTube, like and put a comment outside the live as well. Hi, brother. Come on. Good to see you. How you doing? How you been? Good evening, Miles and CMF. Callie, good to see you. How you doing? How you been? Hi, Miles. Good to see you. Good to see you. Michael, how you doing? How you been? Now, first news on tonight's live, we're going to talk about that wallet that just turned back on after a very long time with a valuation of around $2 billion. which is a tremendous amount of Bitcoin to have, which is essentially called some sort of a shaky ground on Bitcoin's footprint. So here it is. A doormat, essentially Bitcoin whale wallet, has decided to move $2 billion worth of Bitcoin after 14 years. Two of the all-time great Bitcoin whale wallets, which had essentially lean dormant since 2011, have mysteriously come back to life and shifted a combined 20,000 worth of Bitcoin, which is around $2 billion worth of Bitcoin at today's price, out of them to essentially brand new addresses. The cinematic essentially of these wallets turning back on, of the Satoshi era wallets, has once again sparked controversy about Bitcoin's real circulating supply. The destiny of the lost coins is what they're calling it, and the possibility of a fresh volatility as the market essentially teeters their all-time highs right now, testing their all-time highs. The two wallets, both of which were opened back in April 2011 when Bitcoin traded for around 78 cents, each moved 10,000 worth of Bitcoin on 4th of July 2025, which is essentially today. The moves essentially were first pointed out by blockchain analysts at Whale Alert and essentially Look On Chain before other chain data accelerated verification of this news also. The Bitcoin now worth over $1 billion per wallet had remained completely dormant through 3 bear markets, the collapse of Mt. Gox, and Bitcoin's run to $110,000. The people that own these wallets didn't move them at all. Most significantly, the coins were not being deposited onto exchanges, but into other fresh addresses, causing speculators to suspect the owner may be upscaling their wallet security or preparing for future transactions rather than maybe selling. This intel has fueled gossip on social media outlets, with some speculating that the wallets could be owned by Satoshi Nakamoto himself or earlier Bitcoin influencers, while others suggest possible links to Silk Road and recently pardoned individuals. Historically, the reappearance of long dormant Bitcoin addresses, especially ones of such a massive magnitude of $2 billion worth of Bitcoin per wallet, has been a signal for market volatility. While these particular transactions have yet to mean pressure in the form of essentially any sort of selling, since the coins did not move to an exchange, the psychological impact is very enormous on the market space. Traders and experts look closely at such whale activity as potential indicators of supply shocks or even price volatility. Real-time on-chain analysis essentially presents the information that while some of these essentially vintage wallets and whales have sold during 2025's rally, there are still most coins in Satoshi's era wallets remaining off exchange, limiting essentially their near risk term of downside. And also, data has come out of CryptoQuant, and it presents the news that the exchange whale ratio has actually fallen, meaning fewer whales are selling out and a more neutral market environment. Even then, the mere possibility of these coins surfacing onto the market at some point is sufficient to keep traders on their toes. In the past, whale essentially reactivation on large scales have happened during periods of heightened volatility, and at times local markets have topped. However, not all dormant essentially wallet movements translate into sell-off whale wallets, and sometimes simply upgrade scrutiny roll-on coins into new custody solutions or set up for inheritance and essentially estate planning. Recent movements to non-exchange essentially addresses suggest no immediate seller intent, but they also essentially re-raise the question of how much of Bitcoin's supply is truly lost or simply just hidden away. On-chain data also shows that percentage of long-term holders' Bitcoin supply is at a near-time all-highs despite some of the older coins moving. Such actions is double-edged, and it can prop up prices by reducing the circulating supply, yet impulsive whale movement can quickly change sentiment. So two essentially Bitcoin whales. In the time period of Satoshi Nakamoto, the founder of Bitcoin, that same time period, 2 wallets were created at that time period, and both of those wallets hold exactly 10,000 essentially worth 10,000 worth of Bitcoin coins in each wallet, equaling to essentially about $2 billion. Those wallets have turned back on after 11 years, which raises the question of do we have lost wallets when it comes to Bitcoin, or just wallets that are sitting on the sideline? $2 billion worth of Bitcoin, if it ever does come on the market space to be sold off, it's going to cause a ripple effect inside the market space. I'll tell you what, Michael Saylor is not going to be sleeping well at night if those 2 wallets worth of $2 billion worth of Bitcoin decide to essentially sell their Bitcoins. Michael Saylor is not going to be sleeping well at night. I don't know why I'm drinking Coke. Water. Now, moving on from that, that also has caused some sort of market volatility today as well. But moving on from that to positive news inside the crypto space, which is regarding the US House. And the US House has just declared July 14th Crypto Week for legislation. Now, we all want rules and regulations inside the crypto space. It's the only thing that can actually save the crypto space. A long time ago, if you said to somebody inside the crypto space, we need rules and regulations, they would have said, no, you're crazy. Crypto is supposed to be different from government control and essentially the institutional control and the banking control. Nowadays, times have changed. We need regulations. The faster we get regulations, the faster we can move on into utility, which is actually what matters when it comes to cryptocurrencies. And it's great to see that the US House has declared essentially July 14th, the crypto week, starting of the crypto week for legislations. Chairman French Hill states this step could maintain US leadership essentially in digital asset innovation and privacy essentially protection. Immediate market movements are anticipated as regulations develop. The US House announced a legislative essentially focus on digital assets led by key figures like French Hill, Mike Johnson, aligning with essentially President Trump's pro-crypto agenda. And the three major bills include the Clarity Act, which is very needed for crypto space to see where cryptocurrencies stand. The Anti-CBDC Act is what they're essentially talking about, which I don't think is going to be passed. And if it does, the Anti-CBDC Pact actually says inside of it that it means that the Fed can't create a CBDC. So a lot of people don't know this, but when it comes to the Anti-CBDC Act, it actually states on the lines of the Fed is not allowed to print CBDCs, is not allowed to make CBDCs. Nowhere on it does it say a private entity essentially can't print CBDCs for the United States. So technically the Anti-CBDC Act isn't ban all CBDCs in the United States. It just essentially states that the Fed isn't the one that's allowed to print it, which leaves room for alternatives like a private entity that essentially owns and creates the CBDCs for the United States. So a lot of people don't know that. They just think anti-CBDC ban is complete CBDC ban. No, technically it's just the Fed that can't print it. Another essentially alternative entity can actually print it if they wanted to, under obviously the US government. Now, the Genius Act also is going to be, essentially in this legislation week. So legislation week is about the Clarity Act, the Stablecoin Act, and also essentially the Anti-CBDC Act, aimed at essentially precise regulatory frameworks and digital asset innovation. So we're going to have a whole week of regulations. The faster that happens, the faster XRP, XLM, XDC, Solana, Cardano, TON, AVAX, they can all detach themselves essentially from Bitcoin's footsteps because they can start going into utility because essentially of rules and regulations. The event essentially pivots around passage of significant cryptocurrency legislations in an effort to solidify the United States as a dominant force in digital assets. Support from congressional leaders underscores its importance in advancing a structured market approach. We are taking historical steps to ensure that the United States remains the world's leader in innovation, and I look forward to Crypto Week in the House, in the US House. We are advancing landmark legislations to establish a clear regulatory framework for digital assets and permanently essentially blocks the creation essentially of central bank digital currencies, obviously, as you know now, from the Fed, to safeguard Americans' financial privacy, said French Hill, chairman of the essentially House Committee on Financial Services. Anticipated regulatory clarity has investors and institutions closely observing possible impacts on cryptocurrencies and stablecoins. The legislation may drive shifts in market volumes, cementing the US as the frontrunner in digital jurisdiction. The bills could also bolster financial privacy protections, reducing concerns about essentially other matters, and political and business stakeholders express enthusiasm about this crypto week of just legislations, essentially highlighting the substantial policy transformations in digital asset domains. Institutions are excited about this legislation week that's going to be coming up for cryptocurrencies because they're no longer going to be thinking about, are we in a gray area? Are we not in a gray area? Can we do this inside the crypto space? Can we not do that inside the crypto space? So this is going to clear up everything. A lot of people thought regulations is going to be way into the future when it comes to essentially the US. Seems like we're about to get legislation week coming up. Previous congressional discussions on digital assets acted more as procedural, essentially, measure and markers. In contrast, Crypto Week's full legislative schedule represents a more extensive and targeted effort, potentially leading to market stability. Past regulatory events showed moderate market boosts for major cryptocurrencies. These bills, if passed, might increase institutional confidence and bring clarity and contributing to sustained market growth, particularly for stablecoins and DeFi tokens. This is major news. This is essentially what we wanted for the longest time inside the crypto space. Everybody remember when the White House had the first crypto meeting and people thought it was an absolute joke? It wasn't, because that was essentially setting the foundation for these types of meetings that are coming up now, which is the Crypto Week. This is going to be a lot more essentially extensive and a lot more detailed on what's to come inside the United States. And it's all about regulations. It's all about passing regulations, more importantly. And institutions are right now lining up to see what happens, to see how fast they can jump on the crypto wave. This is incredibly bullish news. And essentially the US House is, regarding this bill, they're putting it as the July 14th Crypto Week for legislation. So keep that on your calendars for July 14th, essentially, to be known as the Crypto Week. Now, moving on from the United States and their legislation process to China. But there's some relevance. And the relevance is that China essentially is being pressured by their own institutions to move quicker into a CBDC world and a stablecoin world also. So here is the latest on that. And the interesting part is that today the US introduces Crypto Week coming up July 14th. China today introduces the idea of going into stablecoin regulations and essentially cryptocurrency, not cryptocurrency, but stablecoin regulations and CBDC regulations. Ironically, today also Russia comes out and says they're going into stablecoin regulations also and CBDC regulations. So the same day the US announces they're going into CBDC essentially regulations and stablecoin regulations is the exact same day that China announces the same thing and Russia announces the same thing. Coincidence or coordinated? So here it is. China threatened by tariffs and the semiconductor war. Tensions are surrounding its oil supply in the Middle East as well. It is now on its knees. The scenario would be tempting for its essentially detractors, yet rather than begging the United States for some sort of help. It responds differently, quietly. It is refining a discreet but powerful monetary weapon. The yuan-backed stablecoin behind Hong Kong, a strict battle is brewing. China apparently, very quietly, is building their stablecoin, but building it out of Hong Kong instead of building it within China. It's essentially in the hushed corridors of Beijing. The giants JD.com and Ant Group do not mince words. For several months, they have been pleading before the People's Bank of China, which is their essentially central bank, to approve a stablecoin based on the offshore yuan. This initiative is happening alongside other major geopolitical shifts. In Russia, the digital ruble is about to become mandatory for banks and large retail chains. Hong Kong, this half Chinese, half international hub, would be their playground. China is using Hong Kong as their playground, testing playground for that digital world they're heading towards. With a yuan stablecoin, because the one in Hong Kong dollar remains, in many respects, an extension on a greenback. For Richard Lee, the founder of JD.com, the issue is clear. The yuan backed by a stablecoin is essential to support the internalization of our currency. So China is trying to aim bigger than essentially when it comes to stablecoin. They want the world to be using the Chinese yuan stablecoin. Obviously, the world is not going to be using Chinese CBDC. Let's just be very honest, because no country wants to use another country's CBDC because CBDCs are heavily programmed and there's no trust between any country. Russia's not going to trust China's CBDC, even though there's been news articles about how they've done some sort of oil trades. As time goes by, that trust is going to break. The same way BRICS fell apart because there's no trust between those BRICS countries, as I said previously. So no country is really going to trust another country in a CBDC world to use their CBDCs. So China's not going to hold Russia's CBDC or American CBDC, and Russia's not going to hold called American CBDC or essentially Chinese CBDC, because they don't trust each other, because it's programmable money. So instead, that's why essentially you have an asset like XRP play a major role, because each country will hold XRP because it's a neutral asset between these CBDCs. Let's just be fairly honest with ourselves. That's another key factor when it comes to XRP. But anyways, for Richard Lee, the founder of JD.com, the issue is clear that the yuan stablecoin needs to also be created, because there's a higher chance of other countries maybe even using the yuan stablecoin because they'll never use the yuan CBDC. Hong Kong will officially become, as of August 1st, 2025, a regulated ground for stablecoins. JD and Ant see a geopolitical opportunity aimed at rising monetary tensions. They want to free themselves from the digital dollar, which, according to the Bank of International Settlements, accounts for more than 99% of existing stablecoins. 99% of existing stablecoins is digital dollars. Even in a digital world, who rules the world? The US dollars. It's funny because people always said going into a digital world, we can move away from the US dollars, but ironically, it's the US dollars also that's leading the digital world. And China essentially is trying to, create their own stablecoin and compete with essentially digital dollars like USDT, USDC, RRUSD, and so on. When China essentially proposes is not a Western-style crypto adoption. It is a response, a crypto pivot designed within the rules of the party. Hong Kong, long essentially a financial laboratory for mainland China, has become a key pawn again in the global monetary puzzle. On May 21st, 2025, the city adopted the Stablecoins Bill, an ambitious legislation regulating stablecoin issuers. As de-dollarization essentially accelerates, because we're going into this digital world, openly or behind the scenes, the world is seeking alternatives. SWIFT faces rivals. A lot of people inside the crypto space or outside the crypto space, if you told them a long time ago that SWIFT is failing, people would say, you're crazy. SWIFT can't fail. It's too big to fail. Well, if you don't adapt fast enough, you're going to essentially be removed. And even China themselves is stating essentially that SWIFT is now rivaling essentially against other blockchain companies, and obviously they're referring to companies like Ripple, which has always been the rival to SWIFT. As I've said previously, SWIFT is not a messaging service, even though it is, and it's not a payment system, even though it is. It's actually just a political tool. SWIFT goes around and sanctions countries, which is the reason why SWIFT is going to fail in a digital world. Everybody always has that fear in the back of their heads as a world leader that one day SWIFT might sanction them because of what the United States says. And that's why SWIFT is just a failing payment system in general, because it's a political tool, not a messaging tool or a payment tool. And essentially, SWIFT faces rivals. Dollar stablecoin regulations are tightening in Europe, and CBDCs are essentially spearheading right now. And even JP Morgan, I shared the news a few nights ago, essentially on this live, that JP Morgan is also said that they don't see Circle's USDC dominating the world in any sort of a way, and they actually see CBDCs is the one that's going to be dominating the world, not essentially stablecoins. Standard Chartered also regarding digital yuan, a stake token, programmable, compatible, and the vision of control that Beijing cherishes so much. Standard Chartered Bank, identified by JP Morgan as the primary beneficiary for the Chinese yuan. JP Morgan essentially is the one behind the Chinese stablecoin also. JP Morgan is behind the Chinese yuan, the Chinese stablecoin. They're trying to give them that extra help if they need it and so on. And the Chinese yuan's essentially internalization continues its active involvement in the Chinese market. The analysis maintains a hold rating for the bank aimed ongoing developments. Standard Chartered's focus on RMB of the essentially expanding their stablecoin aligns with China's economic openness, potentially reshaping global banking dynamics. Their strategy may lead to increased integration with digital financial systems. JP Morgan highlighted Standard Chartered as a key player in this essentially movement of the RMB due to their active market participation. We have essentially participated very actively in the essentially expanding of the Chinese stablecoin yuan of RMB and the opening up of the Chinese capital markets, stated Bill Winters, Group CEO. Since lifting foreign ownership caps, the bank has led initiatives like the first wholly essentially foreign-owned securities firm in China. Standard Chartered aims for substantial corporate and investment banking income essentially from cross-border payments and emphasizing the RMB's definite trade and clearing. CEO also Bill Winters stated that the bank's commitment to making the RMB easier for international investors. Standard Chartered's initiative have expanded their influence in regions like Hong Kong, a critical essentially for RMB transactions, thus blustering market presence. No direct impacts on cryptocurrency markets or tokens such as Ethereum or Bitcoin have been observed so far. The bank's investment in facilities like the Chinese cross-border interbanking payment system signifies the deepening of their global financial interconnectivity. This could enhance future RMB-backed stablecoins and digital asset platforms. These efforts also align with China's policy facilitation for broader RMB essentially use cases. Standard Chartered Bank is set to influence RMB's essentially standard through the robust regional infrastructure and investments. This may also open up positions for them to leverage the intersection of traditional finance and emerged digital economies, and reflects a very strict essential alignment with shifts in international financial landscapes. So China essentially is playing the role of creating a CBDC, the role of creating essentially stablecoin backed yuan, because they want to compete with USDT, USDC, and RLUSD. China feels like it's being left behind because we're moving to this digital world. And once again, the dollar is the one taking the rankings, and China is not happy. China was not happy when BRICS failed and everybody backstabbed each other because nobody trusted each other. First one to jump out was essentially India, and then Russia, in between Russia didn't accept payments from India, though they were in the BRICS, and then India decided to backstab China because they wanted to do deals with the United States. So that completely fell apart. And then we're moving further on, where we're going into this like stablecoin, CBDC, essentially momentum. Again, China's not happy because they're losing the race even in stablecoins. So they're trying to accelerate their CBDCs and stablecoins. Now, on that topic, Hong Kong is launching a stablecoin licensing to regulate digital assets. So as the United States is about to be having the Crypto Week legislation starting July 14th, China, regarding their essentially regulations, essentially, and creating their stablecoin and creating their CBDC at the exact same time today was announced from JD.com and Ant Group. They're essentially the ones that are pressuring the Central Bank of China, People's Bank of China. And today also regarding Hong Kong coming out in terms of crypto regulations as well for crypto regulations for stablecoins, and also Russia, which we're going to get a little bit later on tonight. A lot of countries came out with the same announcement today. So here it is. The licensing activation in Hong Kong is poised to shape the landscape of digital currencies by enhancing the regulatory clarity and attracting institutional interest. Hong Kong is set to enact its stablecoin licensing regime this August, following essentially the approach of the Hong Kong Monetary Authority. This initiative underscores a focus essentially of regulations and innovation in the financial technology sector. Major companies, essentially, as we talked about, like Ant Group and J.com, have essentially indicted plans to apply for a license, suggesting that they could move to mobilize significant industry engagements. The new framework will focus on fiat reference stablecoins directly affecting those linked to traditional currencies, thus influencing major cryptocurrencies and DeFi activities. The amount of liquidity this is going to bring to the table worldwide, because now essentially the US is going head first into cryptocurrencies with that crypto week. China is going head first. So is essentially Hong Kong, and so is Russia. The decision creates a robust structure for stablecoin issuers in Hong Kong, potentially drawing institutional players by addressing concerns over transparency and compliance. This also comes alongside efforts to simulate essentially capital influxes in digital asset ecosystems. Historical regulatory actions in regions like the EU have shown that similar frameworks often bolster confidence, investor confidence. For example, the EU obviously has the MiCA regulations, which essentially has boosted the EU market space when it comes to cryptocurrencies. A few nights ago on this live, I essentially revealed that essentially the amount of people in the EU that are actually using cryptocurrencies or spending cryptocurrencies, using cryptocurrency transactions and bank accounts, or sending cryptocurrencies, or even essentially staking cryptocurrencies, has actually increased by a tremendous amount in the EU due to having MiCA regulations. So due to historical events, yes, we can definitely tell when a country moves towards regulations when it comes to cryptocurrencies, they definitely boost through. Historical regulatory actions in regions like the EU have shown this essentially investor confidence. essentially blustered under the reserve backing and compliance measures. In the near term, Hong Kong's regulatory clarity may invite further participation in stablecoin markets, especially in tokenized assets and DeFi protocols. Future impacts could include innovation in tokenized government bonds, reflecting a broader trend towards safer and more transparent digital financing. Hong Kong is committed to building a comprehensive virtual asset ecosystem through a very prudent regulatory regime that fosters market innovation, said Christopher Hu, Secretary for Financial Services and Treasury of Hong Kong. So that is essentially what's happening in Hong Kong, aligning with the US in terms of their crypto week and China in terms of creating a stablecoin very fast and a CBDC launchment. Next, we're going to talk about Russia. But before we talk about Russia, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments to make, put it down inside the comment section. More than happy to help you out. So let's go inside the comment section first before we do go through the Russian news next regarding what their central bank is doing right now. So let's see where we're at. We were at here. Good evening, Miles and CMF. Cali, good to see you. So how you doing? How you been? Michael, hi, Miles. Good to see you. Good to see you as well. JP says, I don't think Michael is sleeping well at night anyways now. Yeah, because he's definitely stuck in that loop. Evening, Miles and CMF. Happy 4th of July. Good to see you as well. How you doing, Joe? Happy 4th of July to everybody that's watching from the US right now. Hi, Miles. Sorry I'm a bit late, mate. I do apologize. No problem, Addy. Good to see how you're doing. OS just says, please help me. I don't know how to help you because you haven't said why you would need help. Peg says, hi, Miles and CMF. Happy 4th of July. Good to see you as well, Peg. Happy 4th of July. Carlos says, hello, Miles and family. Good afternoon. Great decision, boss. Going for a second opinion. I'll be praying for you and I hope everything comes back clear for you. Thank you so much, Carlos, for the kind words, brother. Thanks so much for praying for me. Miles, remember my words that RLUSD will rule the world, as every country will have their own stablecoin, but they will still use RLUSD. I agree 100%. I agree 100% because it is a much more well-structured stablecoin. RLUSD is 10 times well-structured, most well-structured than USDC or even USDT. USDT struggles to show reserves or any sort of transparency, and they don't want to put their headquarters in the United States, even though they clearly know that that will help them to get greenlit essentially in the United States when the regulations for the Genius Act kicks in. They didn't want to show transparency to the essentially EU market spaces, and they didn't want to hold their reserves in EU banks just in case they one day essentially detract from their stable, from their one-to-one ratio because of what's happened in the past to stable coins with the whole terror situation. USDC has also depegged once in the past due to the Silicon Valley Bank situation, but RLUSD has strong backing, full transparency every month, and Ripple is a very trusted institutional blockchain company. Let's just be fairly honest with ourselves. So yeah, I agree 100%. XRP will be used, XRP Ledger will be used everywhere because of its transparency and speed. I agree also 100% what Frankie Brother said. And greetings, Miles and family. Lena, good to see you. How you doing? How you been, Lena? And low cost XRP, let's go, Frankie Brother. Hi, Miles and CMF. George, good to see you. How you doing? How you been? Even Miles and CMF, I'm late. No problem, Jason. Good to see you. How you doing? Russia. So we talked about the US, we talked about China, we talked about Hong Kong, and now we're going to talk about Russia. And they're all on the same page. So sanctioned Russian giant Rostec bypasses banks with a Tron-based RubX stablecoin. So Rostec, a major Russian state-owned defense essentially company, has found a way to bypass traditional banking systems. It has revealed its intention to introduce its RubX, a stablecoin alongside RT Pay, a specialized platform designed for cryptocurrency-based transactions. Russia is obviously still sanctioned due to the whole Ukraine war situation that's going on. And a Russian company, state-owned Russian company, has decided to create its own stablecoin to bypass all the banking regulations that's opposed on Russia right now due to sanctions, which stops them essentially from conducting international business. The RubX token, which maintains a one-to-one peg to Russian Rub with functions on Tron blockchain network. Tron, obviously, as we know, is a blockchain that has definitely paid their way through for everything they have. Let's just be fair and honest with ourselves. Tron was investigated, Justin's son was investigated for the longest time, and then somehow the investigation started to disappear one by one. But in July 3rd, the company statement, Rostic, indicated that both the stablecoin and the RT payment platforms would function as a secure payment mechanism for commercial entities and retail use. Rostic asserts that the platform operates in full compliance with Russian regulatory frameworks, including central bank requirements and anti-money laundering protocols designed to prevent from illicit activities and financing. Each RubX token is supported by genuine ruble-denominated obligations. This backing is legally secured. The token maintains a 1-to-1 ratio with the actual ruble. We plan to launch the system within this year, and with Rostic acting as a primary operator, stated Rostic Deputy General Director Alexander Nazarov. Rostic has operated under comprehensive US sanctions since June 2022, implemented following Russian military's invasion of Ukraine. These were essentially restrictions enforced by multiple nations, including the United States and European Union, and target Rostic's subsidiary companies and affiliated entities. These sanctions seek to limit Russia's military production and capacity and its capabilities in weapons manufacturing. Industry observers have essentially categorized the RubX stablecoin initiative as Russia's streak attempt to essentially go around SWIFT, the international financial messaging system supervised by the G10 central banks, including the United States. The interpretation essentially gains credibility given that Russia's central bank has explicitly stated in recent years that its primary objective is developing a digital route is essentially to provide Russian corporations and financial institutions with independence from SWIFT. This is not essentially a company that is green-lighted by the Russian government to create their stablecoin for them. This is just some sort of military company that's just tired of not being able to do any sort of military sales when it comes to weaponry, and they just created their own stablecoin on the Tron network and tried to essentially use it for some sort of payment services. The RubX token built on Justin's son's Tron blockchain will have its source code made publicly available on GitHub and undergo essentially verification and security auditing by Certec, an independent international blockchain security firm. Russia also appears to be increasingly embracing cryptocurrencies as a method to essentially regarding international sanctions. Recently, the Russian Agricultural Bank, Rus AG, announced it has essentially collaborating with the Bank of Russia to assess digital assets based on payment solutions for essentially grain export transactions. Irina, the Rus AG's first deputy CEO, categorized cryptocurrencies as a practical alternative instrument for international payments, particularly as sanctions continue essentially restricting Russia's access to conventional financial systems. Russian grain essentially exporters are facing mounting pressure from restrictions that are affecting logistics and shaping insurance and access essentially to SWIFT's banking essentially network. These essentially constraints have increasingly complicated Russian companies' ability to conduct transactions in US dollars or even euros. Both RubX stablecoin initiatives and grain essentially settlement mechanisms built upon Russia's previous experience utilizing cryptocurrencies of Bitcoin, Ethereum, and Tether for oil trade settlements with Russia, essentially with China and India. So apparently Russia is moving away from using Bitcoin for transactions, moving away from Ethereum and USDT because they can't use either one of them for transactions. They're all not what Russia thought they were. State-owned enterprises are also simultaneously developing their blockchain services. For example, in March, essentially Gazprom, Russia's majority essentially state-owned energy giant, launched a series of tradable blockchain-powered digital financial assets. A lot of Russian companies are right now coming forward and building on the blockchain. Similarly, Rostelecom, Russia's largest telecommunications and digital service provider, issued 2 essentially DFAs on the Moscow exchange earlier that month. Additionally, Russia appears to be leveraging cryptocurrencies and distributed ledger technology as countermeasures against international sanctions. In May, Russian media outlet RBC reported that the central bank had established regulatory guidelines governing the use of cryptocurrencies by Russian firms and international trade agreements. And these regulations specify that digital currencies must not be associated with securities issued by hostile issuers, or emphasize the necessity of engaging essentially with projects that maintain a presence in friendly countries. So Russia or Russian companies and some state-owned Russian military companies have come forward and said one of them has created their own stablecoin, which they are intending to use for international purposes to, go around the US sanctions or SWIFT sanctions. And other Russian companies have come forward also and said that they're essentially going to be creating some sort of blockchain, essentially platforms for moving around essentially finance in their own words. So it could be on the reference of tokenizations, or it could just be money transfers. But a lot of Russian companies are heavily involved inside the blockchain sector right now. Now, moving on from all these essentially nations, from the United States and essentially China, Hong Kong, Russia, to another company that's decided to come forward and get involved inside the Bitcoin space, which is the world famous esports giant has announced it will enter into the Bitcoin mining industry. The entertainment essentially channel, entertainment sports channel, esports, has decided to enter into Bitcoin mining, not creating a Bitcoin treasury like other companies that's done, like MicroStrategy or Metaplan and so on, but they decided to create a Bitcoin mining facility. NIP Group, the umbrella company of the world famous esports organizations ninjas in essentially pajamas, announced that it has entered the Bitcoin mining industry. The company aims to produce 60 Bitcoins per month by purchasing a series of mining rigs with a total essentially computation power of 3.11 essentially hash rates per second, which corresponds to production value of approximately $6.5 million at current prices. However, this production represents essentially gross income, not net income, and may differ once expenses such as electricity and operating costs have deducted. NIP Group has established a new essentially unit to manage mining operations and make district decisions regarding the Bitcoins mined and digital computing divisions. And although essentially the company has not yet given details on how it will essentially evaluate their Bitcoins, this new division will also take responsibility for future mining investments. They said, "We are not just a gaming company anymore." NIB Group co-founder and co-essentially CEO Hitchman said in a statement on LinkedIn that after the company went public last year, they wanted to create revenue models in areas other than esports and entertainment, and emphasized that Bitcoin mining essentially stands out as a related and innovative area that will continue to expand in this area. "We are no longer just a gaming company. We are transforming into a digital infrastructure company and fit the entertainment era," noting that they are investing essentially in real computing power and operational capacities. But investors don't seem to have welcomed the decision so far. The company's shares have fallen 17% since the announcement on essentially Tuesday, falling to around $2.13. They have fallen 88% since their peak at $17.76. So this is the first time ever that any company that's went public announced some sort of Bitcoin essentially announcements that their stocks didn't actually rise. It's the first company that their stocks actually started to drop, because I'm guessing their investors are not interested in cryptocurrency, or essentially not interested in Bitcoin at all, or Bitcoin mining industries. Now, on the topic of Bitcoin, Russia has rejected creating a Bitcoin reserve. Russia essentially has completely rejected the idea of creating any sort of Bitcoin reserves, because they say the asset is way too volatile for them to be holding or creating any sort of reserves on it. So here it is. Despite limited allowances for cross-border transactions and investments by qualified individuals, the broader position remains cautious. Speaking at the Central Banks of Russia's Finance Congress in St. Petersburg, Governor Elvir made it clear that Bitcoin and similar assets are off the table when it comes to reserve holdings. Labeling them as volatile and risky, she dismissed the idea of the central bank investing in crypto. She said, "We don't see cryptocurrencies as stable or reliable enough for inclusion in our reserves," said essentially the governor. But do you know what Russia does see as viable? CBDCs. Speaking at the central bank essential conference, Russia continues to reject domestic crypto payments, but has made some expectations. The central bank allows their essentially use in foreign economic activities and investments, particularly essentially by experienced traders and institutions. Still, the messaging is clear. While digital assets may play a role that fringes of Russia's economic strategy, they won't be replacing the rubles or the gold or anytime soon. So, Russia essentially is Russia's governor. She's Elvira. She's completely rejected the idea of a cryptocurrency, essentially wallet, let's say, for the central bank or for the government. But in Russia, they're very big on the idea of CBDCs. And if anybody wants to use stablecoins, it's up to their own one to essentially use stablecoins. And Russia's government takes no ideology into it. But they are still essentially coming up with stablecoin rules and regulations and cryptocurrency rules and regulations in general, similar to a Clarity Act or what essentially the United States has. Now, moving on from Russia to CPI data. So yesterday we talked about the job report of that essentially it passed and exceeded what everybody thought essentially what the data was going to be, and the market was happy about it. Well, soon we're going to be getting essentially CPI data, which is, if it's bad news, then the market obviously will be reacting essentially not in a well manner. And if it's good news, well, we know where the market stands on that too. So macro meets crypto, predicting prices with CPI, Fed rates, and Bitcoin's dominance. So CPI data is what we're essentially waiting for, let's just say. And it's going to have an impact without a doubt on the crypto market space because it always has. Institutional money has changed how crypto trades. Bitcoin and Ethereum now respond to economic news in ways that mirror traditional assets, which is true. Even though, it is people tend to say that Bitcoin is a safe asset, essentially, or a risk-off asset, it doesn't tend to sometimes react like that. And instead, it reacts like a volatile asset to war news, for example, geopolitical tensions and tariff situations. Even though gold will react the opposite in geopolitical tensions and tariff situations and all climb in price, Bitcoin sometimes gets volatile and stunned, and Ethereum always gets stunned, to be fairly honest. But reports on CPI inflation and interest rates move prices. This shift means that macroeconomic indicators are no longer optional for crypto traders. They are a part of the entire core play. So this is essentially what's happening. So official data on inflation, central bank rates, and crypto-specific indicators like Bitcoin's dominance can help anticipate market trends. The analysis essentially draws on macro essential releases, crypto charts, and research from large trading desks. The goal is not to predict the exact moves, but to offer a practical guide to understanding how broader economic trends shape crypto performance. Inflation essentially started rising sharply in early 2022. The Consumer Price Index reported by the Bureau of Labor Statistics reached 9% over a year in June. Bitcoin fell 6% within essentially these days of that release. Investors moved out of the risk assets expecting tighter financial conditions. This pattern continued through 2023 and 2024, when CPI essentially came in lower than forecast and Bitcoin often rebounded. For examples, in November 2022, the month-over-month print was 0.1% against a forecast of 0.3%, and Bitcoin gained nearly 4% within those 2 days. So when that first data came out, it went sideways. Second data came out, it went completely true. This essentially repeated reaction suggests that Bitcoin now trades more like a tech stock than a safe haven. It does not act like essentially as a hedge against inflation in short term. Instead, it follows interest rate expectations. If inflation readings push the Federal Reserve towards cuts, traders essentially often rotate into crypto. If inflation jumps, traders exit faster. CPI for May 2025 showed price growth slowing towards the Federal Reserve's targets. If that trend continues, investors may add risk again. However, if energy costs or wages essentially lift inflation above forecast expectations, it may shift back towards tightening. Traders will likely adjust positions in Bitcoin and Ethereum based on these releases. CPI releases now act as drivers for short-term price essentially directions. Obviously, I'll keep everybody updated on the CPI reports once they do get released. The Federal Reserve began essentially raising interest rates in March 2022. That cycle lasted until mid-2023, with the target range reaching 5.25 to 5.5%. Each increase indicated tighter liquidity, and Ethereum often fell in the days following these announcements, mirroring declines in essentially growth-focused equities. Ethereum's sensitivity to rate decisions become clearer in several key moments. After essentially the June 2022 hike of 75 basis points, Ethereum dropped by over 8% within 48 hours. The same pattern repeated in September by contrast when the Fed paused in July 2023. Ethereum rebounded by nearly 5% over the next three trading sessions, and however, one expectation came in March 2023, the collapse of Silicon Valley, a bank that triggered in panic in financial markets, and the Fed raised the rates by 25 basis points, but indicated it might essentially stop soon. That shift essentially helped Ethereum recover as it climbed from under 1,400 to over 1,800 within 3 weeks. These events show that Ethereum's linked to monetary policies and rate hikes tighten conditions and push Ethereum down. Pauses or signs of easing often leads to sharp rebounds, and Ethereum trades like a proxy for risk appetite and liquidity market drivens. Bitcoin reacts like a tech stock when it shouldn't do, and Bitcoin should be reacting like a safe haven or essentially a risk-off asset, which is what the title has been given to. However, for some reason, it reacts like a tech stock here and there, which is not good because the rest of the market follows its footsteps. This is why we need regulations ASAP to move into utility that depart from Bitcoin's sometimes stupidity when it comes towards the market space. But Ethereum just moves in odd locations, to be fairly honest, in every sort of aspect. It doesn't react like a safe haven or a risk-off asset. It's just volatile in every single stage. And these macroeconomic events that are going to be essentially coming out, the CPI data that we're going to be getting, on the tariff news that we're going to be getting very soon, is all going to have impacts on the market space. And once those data are released, I'm definitely going to be sharing with everyone so at least everybody knows where things stand. And regarding tariffs, the US is now threatening 17% tariffs on EU's agricultural exports. So before we go through that news, let's go to the comment section first. As previously, this is live, which means if you have any questions or comments to make, put it down inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section, and then we go straight into the next news. We were at here, Peg. Let's go CMF. Let's go Peg. Thank you everyone so much for the emojis that's going on inside the comment section. Absolutely amazing to see. Enthusiasm, like and retweet. Let's go Peg for saying that. Hello, Miles. I'm late to the live. Missed much news. T, you've missed quite a bit. I'll be fairly honest. Johnny, hi, Miles. Some guy said XRP is a meme coin. Is this true? Is XRP a meme coin? Hell no. If anybody says XRP is a meme coin, they are an absolute moron. I'll be fairly honest. If you think XRP till now is a meme coin and still is a meme coin, then you deserve to be poor in a CBDC world and trapped in a digital prison. I'll be honest. I'll be very honest. If you think in 2025, on July 4th, still, if you think XRP is a meme coin in today's society, on July 4th, 2025, then, and you don't get involved in XRP because you presume it's a meme coin, then you deserve to be poor. You deserve to be trapped in a CBDC digital, essentially, prison world that we're heading towards. Miles, when you expect regulations? Well, regulation week is coming up July 14th. So let's see what happens then. Let's go CMF. Ray, thank you so much for the $5 donation. Absolutely amazing. Let's go. Thank you so much, brother, for that. Wow, dollar gift. Let's go, Johnny. Let's go, Ray. Honestly, thank you. Now, the US. The US threatens 17% tariff on EU's agriculture exports. So here is the latest on the tariff situation. The potential tariff may impact EU and US trade relations, but has not directly affected cryptocurrency markets or involved major crypto figures so far. The US essentially is reportedly contemplating the 17% trade tariff on EU agricultural exports, according to information essentially sourced from the Financial Times. Yet no primary updates are provided by this essentially time so far on July 5th. So it's just a rumor that's going around from sources right now that the US is getting ready for 17% increase on tariffs on EU nations. The US is reportedly contemplating a 70% trade tariff on EU's agricultural exports. And if this tariff proceeds, it could strain essentially relations, influencing essentially their trade policies between these nations. However, cryptocurrency markets have shown no immediate reaction so far. Tariffs generally create risk-off environments. Crypto's response depends on whether it's seen as a hedge or a risk asset. When traders turn more risky averse, we often see brief crypto sell-offs, but also stablecoin inflows in traditional essentially DeFi. And Experts' opinions are not direct quotes of this matter in any sort of a way. Previous EU and essentially previous US and EU trade wars influenced traditional markets more than crypto, with the latter responding essentially mainly to general public's essentially sentiments and understanding the prior patterns that helps foreseeing essentially potential future impacts. Major financial events such as new tariffs typically result in minimal direct impact on cryptocurrencies. However, given the current market conditions and the absence of essentially concrete policy changes, crypto assets might closely track global risk sentiments during related events. So, tariff situations. There's a rumor going around that Trump or Trump's administration is getting ready to increase essentially EU tariffs by 17%. That could go either way for the crypto space. If that news becomes true, Trump's administration essentially comes out, say 17% increase on essentially EU tariffs for agriculture exports. That could go both ways for the crypto space. If the crypto space is seen as an alternative towards that scenario of hedging against inflation, then crypto will go up in price. But the other way, crypto can also be seen as a risk situation, which means people will jump out of crypto assets and go into stable coins. So it could go either way when the news comes out on 17%. 17% tariff increase can go good for crypto and bad for crypto at the same time. It's just about seeing how the market reacts. Is the market at that particular time going to say, yes, crypto is a risk-off asset, I'm going to jump into crypto to hedge against that 70% tariff, or investors going to say, maybe not, I'm going to go into stable coins because this tariff situation is a bit off. So that could go both ways, good or bad. Let's just see how the market plays out. Now, Binance. Binance has unveiled something revolutionary, and it's basically institutional loans for strict leadership and boost for Europe. I said this a long time ago, about 2 years ago. I said crypto exchanges could eventually turn to banks because they operate like banks. They offer you crypto bank cards. They hold your essentially assets within themselves. You can spend your assets through crypto companies like Binance Pay and so on. So I said, it makes sense later on in life that these crypto companies like Binance, crypto exchanges like Binance, Coinbase, and so on, just turn into crypto banks in the future. So here it is. The cryptocurrency world is consistently evolving and leading the charge once again. Is Binance the world's largest crypto exchange in a move poised to reshape the institutional crypto landscape? Binance has recently unveiled two significant developments: the launch of its dedicated institutional loan service and streak essentially loans. And it's a strict appointments of a new head for Europe and the UK. These initiative underscores Binance's commitment to expanding its reach and catering to sophisticated financial entities, signaling a maturing market and increased institutional interest in digital assets. For too long, institutional players have sought more flexible and robust financial instruments within the crypto space. Binance is stepping up to fill this void with its new institutional loan offerings. This essentially service is specifically designed to provide substantial liquidity to high net worth individuals and corporate clients, bridging the gap between traditional finance and the dynamic world of essentially digital assets. Key features of Binance's institutional loans: significant capital access. Clients can borrow up to $10 million in stablecoins like USDT or USDC. The substantial sum provides the necessary capital for large-scale operations without liquidating their crypto holdings. So people can borrow, or institutions can borrow against their crypto assets from Binance Exchange up to $10 million. Flexible leverage. This service offers up to 4x leverage, allowing institutions to amplify their trading positions or operational costs with greater efficiency. The next clientele entering the crypto space has always been talked about to be institutional clients. It makes sense that Binance is now getting ready for institutional clients. It's also an indicator for us who's next entering the crypto space. Institutions, they have all the money. Attractive interest rates. A standout feature is the potential for zero interest depending on specific terms and collateral agreements. This can essentially signify and significantly reduce the cost of capital for borrowers. Diverse collateral options as well. Loans can be secured against a variety of major cryptocurrencies, including Bitcoin, Ethereum, Solana, Binance Coin, and so on. This flexibility allows institutions to utilize their existing digital asset portfolios effectively, targeting clientele. The service is exclusively available to VIP 5+ clients and corporate entities through Binance, ensuring that it caters to professional users with established financial needs and compliance standards. assets. Cross-collateralization, essentially a particularly innovative feature, is the ability to enable cross-borrowing essentially across multiple accounts, and this streamlines the borrowing process for complex institutional structures and offers greater capital. I talked about this a long time ago regarding essentially borrowing against your crypto assets, because it's the best way to skip on tax in a very legitimate manner. Nobody likes paying tax. No, there's not a single person on this planet that likes the idea of giving away their wages to governments, especially to governments that don't better their lives. For example, governments that don't fix their roads or their communities, or just open their borders and welcome everybody in. So nobody likes the idea of paying taxes, because the money never goes in the right hands and you're just paying money for no apparent reason. Let's be fairly honest with ourselves. If the money was going to the right hands and governments were securing borders, helping their essentially citizens with actual free healthcare and so on and so on, and fixing the roads and fixing communities, sure, people wouldn't mind paying taxes because it's actually going to good use. But unfortunately, we don't know where our taxes end up. It could end up in a random country in Europe or the Middle East, nobody knows when. But on that basis, essentially, regarding Binance and regarding the institutional sector, institutions enter the crypto space at a rapid pace. Binance offering crypto assets, essentially borrowing and lending services, is brilliant, and it's the best way for even you later on in life to borrow against your crypto assets. It's not financial advice in any sort of a way, but if you don't like paying taxes, you can just borrow against your crypto assets, use them as collateral, and you don't pay tax on debt. A lot of people say open up an LLC. Some people say, for example, I've seen on X, people saying, or so on, saying open up LLCs, open up an LLC to do this with your cryptocurrencies and that with your cryptocurrencies and so on. You don't need to essentially open up an LLC. You don't need to move country. Some people would say move to Dubai or move to so on and so on. You don't even need to do that if you don't want to. You can just borrow against your crypto assets, use them as collateral, and essentially skip on tax because you don't get taxed on debt. But the moving country one makes sense if you're setting up a business in a different country. That'll make a lot more sense. But there's multiple methods, but you don't need to open up an LLC to do that. It's a waste of time, waste of money, waste of resources. So if anybody out there is telling you to open up an LLC for your cryptocurrencies, why? It's a very moronic move to do. You're just paying for people to set up things that you don't need in the future. You don't need an LLC. All you need is your crypto wallet and a bank like Standard Chartered Bank to borrow against your crypto assets, or HSBC Bank to borrow against your crypto assets. Or even Binance now is offering the service of borrowing against your crypto assets so you don't pay tax. Because you don't pay tax on essentially, debt. You pay tax on your own money, on your own cryptos when you sell them and so on. So if anybody's telling you essentially open up an LLC, there's no need whatsoever. Now, Ripple is what we're going to talk about next. Ripple and Kennedy are launching on the XRP Ledger Accelerator in Singapore. So if you have heard this news, if you haven't heard this news, here is what's happening on that matter. Ripple, in partnership with startup Kennedy, recently launched the XRP Ledger Accelerator Singapore, offering grants of up to $200,000 to promising, essentially early stage startups building on the XRP Ledger across the Pacific regions. This initiative aims to spur innovation and real-world adoption of the XRP Ledger's scalable and low essentially cost infrastructure. Startups joining the accelerator will receive financial backing, mentorship, access to Ripple's technical resources, and connections to a network of investors and potential customers. The program is tailored to help early teams refine essentially their products and market fit, improve their technical essential integrations, and prepare for funding rounds. The accelerator prioritizes essentially startups developing real-world XRP Ledger use cases such as payments, remittances, tokenizations, DeFi, NFT applications, and by targeting essentially practical solutions. The initiative seeks to drive meaningful adoption of XRP Ledger across industries while supporting regional economic essentially growth and digital innovations in the Asia Pacific. Ripple is doing a lot of things. We're seeing Ripple's name pop up quite a lot right now on the news, starting essentially with that major announcement of the bank license, which is another reason why you could just wait for Ripple to open up their bank to borrow against your XRP and skip on tax. Not financial advice in any sort of a way whatsoever. But when Ripple gets their banking license, you could just borrow. For example, I could borrow using Ripple's bank essentially on my XRP, use it as collateral, and not get taxed, because you can't get taxed on debt. But obviously, the catch is you have to pay back the money you borrow, or when your XRP goes in value. For example, let's just say if you borrow, let's say you borrow a certain amount and your crypto assets are sitting around, for example, $100. Let's say you have XRP and it's sitting around $100, and you decide to borrow against your XRP sitting at $100. Your XRP, let's just say it goes up in value. Let's say your XRP now goes from $100 to $150 to $200. You can essentially borrow against your XRP again and pay off the original loan. And if XRP goes higher, you can borrow again, pay off the original loan. Higher, pay off the loan. Just continue a loop cycle. But let's just say it goes the other way around. Let's just say you borrow at $100 per token and it goes below that $100 valuation. Then obviously you have to fill that gap or that void with another certain asset until essentially it stabilizes and rebalances and goes back up. So obviously you got to consider both sides of the matter. But come on, $100 XRPs, you know it's going to go higher than that. Now, let's go inside the comment section first. Let's see what's happening there. Let's see where we're at. We were at Happy Pisces. Good to see you as well. How you doing? How you been? Adi says, Miles, do you look into Keter? As I've missed your response because I know you're always replying. I haven't looked into KTA. I can take a look into you after the live. The direct message not together. I'll give you a response, no problem. Mr. Tauri says, hello. How you doing? Hello. Good evening, Miles and CMF. Mike, good to see you as well. How you doing? How you been? Right is what DKKD says. Let's go. Happy Pisces says, I think you're suggesting an LLC or a trust or to become incorporated. If you're going to have a financial organization, be a custodian besides a regular bank, I don't think banks are doing it for a while. No, that's not what I was referring to. I mean, I don't think local banks are going to offer you to borrow against your crypto in the next 6 months, and some people want to borrow against sooner. So they must go to financial office custodian. I agree with that. Yes, 100%. If you're referring to people wanting to borrow, well, Hong Kong, HSBC in Hong Kong is letting, for now, institutions borrow against the crypto assets. Binance, for now, is letting institutions borrow against the crypto assets. There's a firm in essentially in New York, in Wall Street, that is offering lending services and borrowing services to essentially people who hold Bitcoin only or Bitcoin ETFs. And that could be institutions or clients or retail clients as well. So there are firms out there, here and there, that are offering these types of services. But obviously, you want to get it from a very well-established foundational, essentially, bank or organization when you want to borrow against your crypto assets. So there are some, and I do understand people want to borrow sooner, but there are some out there that do offer this service already, Happy Pisces, but for specific tokens and for different jurisdictions only. But things are catching up. What about trust, Miles? If you want to set up a trust, you could do, if you wanted to, you could set up a trust. You could also, 2 places, I would say, setting up a business would be good for you based on essentially the services they provide. Monaco is one, without a doubt. If you ever wanted to set up a business, you could easily get a Monaco passport by setting up essentially an account, putting $1 million in, 1 million euros into it. You're not allowed to use that 1 million euros because that will give you your citizenship essentially. So you can become a Monaco resident and with your passport. And also Monaco is obviously tax-free. So you could set up a Monaco business if you wanted to, and live there potentially, or you could essentially go to the United Arab Emirates, so Dubai. You could go to, in other words, to set up a business and skip on certain taxes. There are some taxes in Dubai, but certain taxes are non-visible. Let's just say, but you can set up a trust and you can set up businesses in those particular countries if you wanted to. None of this is financial advice whatsoever, and you should always consult with essentially some sort of financial advisor before making any financial decisions. Again, not financial advice at all. When XRP is global control and worth a lot. When is XRP has global control and worth a lot? We're not that far off from that timeline. I understand the banking license won't happen until at least 12 months for Ripple. It could be sooner. You never know. Things are moving at a much more rapid pace, so it could be a lot more sooner than 12 months, to be fairly honest, because Ripple is not aiming for a, essentially a traditional bank. Essentially, they're mostly aiming towards a neobank status, not essentially that traditional bank status. Good evening, Miles and CMF. Manny, good to see you. How you doing? How you been? Wow, I thought Monaco was 500,000 euros. They need to become recognized citizen. It's now 1 million. It's between 500,000 and 1 million, to be fairly honest. Now, on that note, we have also come to the endings of tonight's live. We went through all the news, and I wanted to go through the comment section before we do call it a night. But on tonight's live, on episode 327 of the CMF Live, we talked about essentially Ripple expanding the XRP ledger into an accelerator program in Singapore. We talked about essentially borrowing lending services from Binance and other essentially banks out there that you could be doing these services with, but obviously not financial advice at all. We talked about the US possibly threatening 17% tariffs on EU's agriculture essentially exports, when the market essentially will have to see how it reacts to that matter. We talked about macroeconomic essentially meets crypto regarding predicting what's going to be happening with the CPI data that's going to be coming out soon. We also talked about on tonight's live regarding Russia's situation of rejecting a Bitcoin reserve or a cryptocurrency reserve, you could say, but still open to the idea of essentially cryptocurrency mining and cryptocurrency stablecoins, so just not the idea of reserves for the central bank. We also talked about the world famous esports giant announcing that they're going to be entering the Bitcoin space by creating a Bitcoin mining corporation. We also went through news on tonight's live regarding also Russia in terms of one particular Russian company coming forward creating a stablecoin and other Russian companies coming forward and saying they're going to be creating some sort of blockchain projects. We also went through news on tonight's live regarding Hong Kong launching stablecoin licensing to regulate digital assets. We also talked about tonight's live regarding China's footsteps in stablecoin regulations and also essentially CBDC accelerator programs. We talked about spearheading their CBDCs and stablecoins. We talked about how the US is also, by the looks of it, spearheading towards crypto regulations because July 14th essentially is going to be known as the Crypto Week, where it's all going to be about regulations inside the United States, the Clarity Act, the Genius Act, and also the Anti-CBDC Act, which I also told everyone what they actually mean by Anti-CBDC. We talked about on tonight's lab also regarding the matters of the mysterious Bitcoin wallet that's woken up after 11 years with two wallets with a valuation of $2 billion worth of Bitcoin. So, those are what we talked about on tonight's live. Those are news articles we talked about tonight's live. This was episode 327 of the CMF Live. Tune in essentially Monday for episode 328 of the CMF Live. So if you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. I host this live that you're watching Monday to Friday, 10 p.m. London time, where you can tune in for the most recent news on cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything that's happening around you, and including how fast are we heading towards this digital future. If you missed this live show, watch it from the beginning again and watch the other previous live shows because this is episode 327. Episode 328 will air on Monday, as usual, 10 p.m. London time. And the disclaimer of this live show has always been not financial advice, not political advice, and whatever I say is only for entertainment purposes. So before we do go, let's go inside the comment section first before we do call the night. Good night, Miles. All CMF. Great live news. Thank you. Let's go, JP. See you on Monday, same time as usual, brother. Night, Miles and CMF. Pablo, see you on Monday, same time as usual as well. Great live as usual. Good night, Miles and CMF. JDC on Monday, same time as usual as well. What happens if you choose to relocate and have dual citizenship? Do both countries hold you accountable? Depends. That's a very dependable situation. Thank you, Miles, for another great, amazing show. See you all on Monday. Let's go, Joe. See you on Monday, same time as usual. Mike, good night. Let's see you on Monday, same time as usual as well, brother. Same timing as usual, Mike. Love you all. I'll see you on Monday, same timing as usual, for episode 328 of the CMF Live. Everybody have a great day or a good night or a great weekend. And I'll see everybody on Monday, same time as usual. Good night, Miles and family. Great live. Many thanks. See you on Monday. Let's go, Ian. See you on Monday, same time as usual. Like, comment, retweet. If you haven't done that already, please do that. Like, comment, and retweet CMF members. If you have done that, thank you so much. If you're watching us on YouTube, like and comment outside the live as well. And if you subscribed and followed to me during this live, thank you so much. I will see everybody on Monday, same time as usual. Everybody have a great day or a good night, depending on where you're on. See everybody tomorrow, same time as usual. Good night, brother Miles. Thank you, brother. See you on Monday, same time as usual. Thanks, Miles. Let's go, Shelly. Thank you so much as well. See you tomorrow, same time. See you on Monday, same time as usual. See everybody on Monday, same time as usual.